All countries use debt to finance their budget deficits. This is one of the best strategies the world over to create wealth. There has been recent concern around Kenya's debt situation, with many Kenyans on social networks using humor to explain the debt crisis. In this video, we look at the events that led to the accumulation of this debt and determine if there is a way for Kenya to pay off its debt, and ultimately answer the question, what if Kenya paid off all its debt? The first thing we should ask ourselves is, how do countries end up in debt? Debt is created when a country spends more than they collect as taxes, or when they have to give tax cuts. Sometimes cutting taxes is important, especially in an economic crisis and where the government needs to spur economic growth. Governments therefore have to borrow when what they collect through taxes or other goods and services that they provide is not enough to pay for its recurrent expenditure and investments. This is often referred to as having a budget deficit. Kenya has recorded a budget deficit for more than 10 years, and though this has averaged at less than 4% of the country's GDP over the 20-year period from 1998 to 2018, there have been significant peaks, such as the -8% budget deficit of 2015. Kenya's debt to GDP ratio has also been steadily increasing, which is why many Kenyans feel the debt situation is worsening. In 2013, Kenya's public debt stood at 1.7 trillion shillings, or just $16.5 billion. Fast forward to 2019, and this has tripled to 5.4 trillion shillings, or $52.5 billion. To put this debt into perspective, Kenya has a population of 45 million people, meaning each Kenyan owes 117,000 shillings, or $1,130. In a country where the GDP per capita is just slightly under $2,000, this means Kenya's debt is 57% of the country's GDP, meaning that for every $1 that Kenya collects, it would spend 57 cents to pay off its debt and only remain with 43 cents to invest in institutions such as health, education, transport, and security. And as discussed in our earlier video, these institutions are necessary to help the country grow. Comparing Kenya's debt situation to other African countries, we find other African countries, for example South Africa, have debt that is 56% of their GDP. Nigeria is at 21%, and expanding this further to include more countries in the world, we find India at 68%, China at 47%, and the US debt at 105% of the country's GDP. Is Kenya's debt far off where other countries in the world are? Why do you think it is not sustainable? Let us know in the comments, given the information we've just shared about the percentage debt that other countries have. Second question we should ask ourselves is, how can Kenya pay off its debt? As we have seen, debt comes when a country is spending more than it is earning, often with good reasons. So to pay back the debt, the country needs to have enough money to pay back the person who lent them money. One way to pay off debt is simply to print more money. Printing money sounds very easy and simple. However, it would lead to oversupply of money in the economy, leading to prices of goods going up. This can lead to galloping inflation or hyperinflation. Galloping inflation is when the price of goods and services in a country rise by more than 10%, but hyperinflation is when this rises by more than 50%. The second way that Kenya can pay off its debt is through restructuring. When the government borrows money, it can borrow either from internal or external sources. The negotiation between the lender and the government determines the terms of the loan, including the amount borrowed, the interest rate, the repayment period, grace period, and much more. If the government cleverly restructures the debt, it can greatly decrease the debt burden by negotiating favorable repayment periods, interest rates, or even negotiate for the debt to be forgiven. The last way that Kenya can pay off its debt would be to raise more taxes so that the Kenyan government can increase collections and run a budget surplus. A budget surplus is simply when the government has more money than it has budgeted to spend. Raising more taxes can be achieved either by increasing the taxes, which would increase the tax burden on the citizens, or by increasing the tax pool to include those who have not been paying taxes in previous periods. The second option of increasing the tax pool is what the Kenyan government is looking to do as per the 2019 budget proposal. The country is looking to increase taxes on winnings from betting and building systems to decrease tax evasion. For example, requiring all banks to have tax identification numbers for all their account holders, in order to monitor people's accounts and reduce tax evasion. Given how poorly Kenya is performing as per the Transparency International Corruption Index, I should however mention that Kenya is highly unlikely to have a budget surplus unless the billions that are being wasted on corruption are reduced significantly. So what's the true value if Kenya was to pay off its debt? If Kenya pays off its debt in full today, it would actually not make any difference in the economy. much of the activities and investments in the country would still continue as normal. However, paying off the debt would have great symbolism in helping Kenya to improve its credit worthiness and negotiation power in international talks, since lenders would have less power over Kenya once we are debt-free. So what do you think about Kenya's debt crisis? Should the Kenyan government strive to pay off the debts? If so, should the citizens bear the burden? Let us know in the comments below. And thank you for watching this video, and as always, don't forget to like, share and subscribe. See you next time. Goodbye.